2021 was a truly unusual year. After 2020, which was a year that was fraught with the effects of the global COVID-19 pandemic, it wreaked havoc on the world markets, it forced families into their homes, it gave us the lockdowns, it caused businesses to shut it down. Following that, 2021 saw the advent of safe and effective vaccines, and despite the lockdowns experienced, particularly in our southeastern states, 2021 was an amazing year for anyone involved in property. It's been the best year I've ever been involved in property, and for many people I know, the value of their homes or the investment properties earned more than they did as property values reached new highs and many real estate records were broken. In today's show, we're going to talk about a whole group of records that were broken in 2021 with Brett Warren, Director of Metropole Properties based in Brisbane. So, welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
After a bumpy 2020, 2021 has rewritten the property record books. From property price growth to interest rates to new home buyers to refinancing to how wealthy Australians are, no matter which way you look, records have been broken everywhere. So to discuss these and which new records we think are going to be set in 2022, in this new year, I'm joined by my business partner, Brett Warren, National Director of Metropole Properties. Hi, Brett.
Hi, Michael. Yeah, well, what an extraordinary year. It's been a whirlwind, hasn't it? There's been a litany of outstanding results for the Australian residential housing market, and all this coming off the back, 12 or 18 months ago with so many grey clouds on the horizon. So, one of the records that must have been broken is the extraordinary amount of demand and appetite for property. But look, I guess let's dig a little bit deeper and look at a few more records that have been shattered. And I guess the first one, price rose at the fastest pace in more than 3 decades.
It depends whose figures you look at, Brett, you're right. But in 2021, we experienced a property boom, the strength of which no one would have picked at the beginning of the year. Now, when we sat down and did these regular podcasts and in my regular videos with Andrew Wilson and the Property Insider videos and in my blogs, I said this was going to be a once-in-a-generation property boom. And there are reasons why we won't have a boom again like this for a long, long time. But even I didn't envisage anything as strong as that. The level of house price growth has been the fastest we've had in almost 3 decades. Over the past year, Sydney house prices rose on average more than 24%, but there were a lot of locations where it did more than 30%. Brisbane's property values increased substantially more than 20% on average. And I know a lot of the properties we bought for our clients did much, much better than that. And Melbourne, which was locked down for most of the year, it only exhibited closer to 15% growth overall. But again, there isn't one property market in Melbourne. And there's no doubt that the regional areas did well last year. They surged. But I think that trend's going to change. But interestingly, Brett, as a result of all this, the number of $1 million suburbs across Australia, properties, suburbs where the median price was $1 million, that hit a record high and it doubled.
It's amazing to see in such a short period of time, the number of those areas really did double and really strengthened the market across the board.
Well, the value of Australian property increased from $7 trillion in November last year to finishing the year at about $9.5 trillion. That's a huge growth in properties. But moving forward, we're not pretending the market's going to be as strong, are we?
No, that's right. Like I think we're probably going to come back to some normality and come back to a normal market. I know there's a lot of factors that we look at, the underlying factors and the leading factors that are changing and pointing to that for the next 12 months, certainly.
Sure. So moving forward, I see that house price growth is going to continue. When we have this chat in 12 months' time, we're going to say, hey, look, we got new record highs in property values again, but not all markets are going to grow strongly moving forward.
Yeah, look, Michael, it certainly looks like we're in for a two-tier property market moving forward, and properties in the inner to middle ring suburbs, particularly in those gentrifying locations we talk about, will definitely outperform the cheaper properties in the outer suburbs and While the outer suburban and more affordable end of the markets performed strongly in 2021, affordability is now becoming an issue as the locals have had minimal wages growth and very low wages growth at a time when property prices have boomed substantially. And in these locations, the residents don't have more money in their pay packet to pay the higher prices and to pay more for property than the average person is doing and what properties are achieving. So more than that, COVID-19 has adversely affected low-income earners to a great extent, and the middle to higher income earners. We always talk about those tier 1 and tier 2 workers, where their incomes are back to pre-pandemic levels. They're growing more quickly, and they haven't really been factored or hit at all. So I think the other factor, Michael, we spoke about quite often are the high-rise apartment towers in our CBDs, which were already suffering from the adverse effects of structural problems prior to COVID-19, and now they become the slums of the future because they're shunned by homeowners and also investors.
Sure. So I agree with you. I think we are going to have a two-tier property market, which means that even though property values will increase, you can't just buy any property into 2022. Oh, we never could anyway. Okay, the next record that was broken was Australians became wealthier than ever before. Now, we're not belittling those or playing down the fact that some people's businesses were decimated, some people's health was affected, and a number of people lost their jobs, and that's terrible. But overall, the various statistics, including the latest Australian Bureau of Statistics figures, showed that Australian households just keep getting wealthier. It was, of course, a combination of the surging property values, the share market, their superannuation, but overall, Aussie household wealth grew 4.4% in the September quarter alone. According to the Australian Bureau of Statistics, wealth's up 20.2% on a year ago. Brett, that's the strongest annual gain in 11 and a half years.
It's quite remarkable, isn't it? And it gets back to what we spoke about before as well, just being an absolutely incredible year.
Sure. Now, of course, a lot of it's related to owning a home. I mean, we talk a lot about investment property, but for the average Australian, it's really just their home or their share portfolio. And as I've already said, the property market has gone up so much in the last year that a lot of people's homes made more money than they did. But Australia is a millionaire factory, or was a millionaire factory last year, despite the pandemic. It's crazy that the total number of millionaires rose by 31%, Brett, over the last year, from 485,000 millionaires to 635 over the last year. That's the biggest rise in recent history, another record that was broken. And the suggestion is that moving forwards, there's going to actually be even more millionaires. A recent report by Credit Suisse estimated that as many as 1.8 million Aussies are considered millionaires today, but that's going to grow to 3.1 million Australian millionaires by 2025. We really are living in the lucky country, aren't we?
Yeah, that's astonishing, those numbers, Michael. It's probably not double, it's very short of double, but it's in such a short period of time, it's quite incredible.
Sure. And what they're talking about is net wealth. So a lot of people, Brett, are talking about, we've taken on too much debt. And there's no doubt that some first home buyers have taken on a lot of debt. They've had to bite off more than they could chew, and now they're going to chew really hard and get in the property market, and good on them. And other investors who are starting off have had to overcommit themselves as well, and hopefully the market will be kind to them. But when the government statistics show wealth, they're talking about net wealth. In other words, the increase in your assets after you've subtracted your liability. So that's a good position to be in.
Yeah. Look, the next one, Michael, is a very hot topic at the moment, but it's during the last 12 months, mortgage rates hit historic lows. And I know it's a very hot topic at the moment.
Well, it is, because people are wondering what's going to happen to interest rates moving forward. But we know that the last time the Reserve Bank raised interest rates was almost 12 years ago. And ever since then, the official cash rate has been falling. In 2021, it was the low rates, the availability of finance that spurred so many people into buying property and pushed property values up. Another record was that new lending and refinancing hit an all-time high. But moving forward, there is some doubt about what's going to happen to interest rates. And while we don't believe the government, the Reserve Bank is going to change official interest rates, the banks have. The banks are doing out-of-cycle rate rises, particularly for fixed-rate loans and particularly for 3 and 4 year fixed-rate loans. So as 2021 ended, in the last month of 2021, if you were to take a 3 year or a 4 or 5 year fixed-rate loan, you'd probably have to pay 1% more, it would have a 3 in front of it rather than the 2 in front of it a month or two beforehand. We're not suggesting it's the right time to lock in rates, even though I did, but I'm not doing it to beat the banks. I'm doing it to ensure my cash flow and control my cash flow. But it's something that we talk about when we do our annual review with clients, because cash flow is important. It's not the aim of investing, but it's one way to make sure you stay in the game.
Yeah, great point. Something that surprised me, Michael, at number 4 is there's a record number of new listings of properties for sale. Because I know during the year there were historic lows around mid-2021, which wasn't really surprising because many vendors were nervous and they didn't want to sell in challenging and lockdown times.
That's right. So there was a shortage of properties during the middle of the year, but it ended up with a record number of new properties listed for sale. So you're right, it was the lopsided supply and demand ratio. People were wanting to buy, but vendors were nervous about selling. They weren't sure, would they get enough people coming through the open for inspection, or if they did sell. Remember, most buyers are sellers and sellers are buyers, so they weren't sure, could I find my next property? So the lockdowns clearly, in the big 2 capital cities, clearly affected transactions. But for the last couple of months of 2021, we had a really robust selling season where there was lots more properties coming onto the market. Interestingly, when CoreLogic reported how many properties were sold over the year, there was a record number of properties sold. So it wasn't that there weren't enough, but boy, were they transacting quickly, Brett.
Yeah, and that's obviously meaning our property markets will probably remain fairly busy in 2022 as well.
Very much so, because there really is still a lot of pent-up demand there. And all those buyers who haven't got their properties yet, investors are back in the market, of course, so they're looking, and home buyers who have now sold at the end of 2022, they're going to be buying again. I think that's one of the things a lot of people forget, that all these people who've just sold, they've got to move somewhere, whether it's into a different state or upgrading or downgrading, because it was really very much a year of upgraders this year, wasn't it?
Yeah, you mentioned that before. The upgraders for renters becoming homeowners, first homeowners were at record numbers, upgraders were there, even downsizers. I mean, they're upgrading their accommodation, even though they're downsizing. So it's a really good point.
And a lot of people left Victoria to upgrade to live in Queensland.
They certainly did, and we see that on a regular basis up here. And I guess leading to our next point at number 5, Michael, demand for housing really did hit record highs. It was really huge there at one point, wasn't it?
It was. And as we said, a lot of it had to do with people upgrading their home. So we wondered what was going to happen with migration being almost cut back to zero over the last year. And really what happened last year was it was that combination of low interest rates and an impetus to shift lifestyle. You actually couldn't go overseas. You couldn't do other stuff. Sometimes you couldn't even go in your local state. So people were looking at, well, how can I live better? But there was also an influx of expats. They came back and they found Australian properties cheaper. And all this happened at a time when there was low supply. And the fact that a lot of us stashed our cash, we couldn't go elsewhere. We had to be for savings. And this created a record demand. So yeah, another record was that 2021 saw a record number of people looking for housing. And in particular, there was lots of first home buyers.
There was, and we'd never seen that before, or not since the homeowner grants in the 2008 and the GFCs and things like that as well. So I know the first home buyers are starting to exit the market and they're starting to be replaced by investors at the moment. But certainly that demand stays and remains strong leading into next year.
First home buyers that were brought forward, their demand was brought forward. They were keen to get in and take advantage of those grants. And what's happened is a lot of people said, oh, there's going to be an oversupply, all these new houses being built in the outer suburbs. Hey, they've all been pre-committed. There's no spec building happening at the moment in those areas, so there isn't going to be an oversupply there. But first home buyers are moving out from mum and dad. They're moving out from their rental accommodation. But as you say, they're now nowhere near as active. They're getting back to more normal levels. And investors who would normally buy in the same price brackets are back again.
Michael, another record is that properties sold at record speed across the country, and being at ground level, I certainly have seen that. Good properties lasting barely a week or two on the market. And that was another record that was broken in 2021.
Well, yes, it was. There were multiple buyers keen to purchase the limited number of good properties, and they were forced to make good decisions. And we saw that on the ground. In many cases, they had to pay a premium to purchase their property. Now, over the course of the next year or two, looking back, I don't think people are going to be upset that if they bought the right sort of property, they paid a premium. They're going to be happy with their decisions.
Absolutely. And as for records broken, Michael, in November, the median number of days a property was listed on realestate.com before it was sold was 30 days, which was an historic low. And even auction campaigns were shortened to 2 to 3 weeks, Michael, rather than the traditional 4 to 6 week selling campaign. And with record auction clearance rates, meaning most properties also sold considerably well above their reserve price.
Yeah, I guess that's another record. At the same time, many private sales were sold considerably above their asking price. I know our buyers agents team in around Australia found that they'd put an offer in above the asking price and other people outbid them. Now, there's no exact way of measuring how many people bought off-market properties, but I think that was another trend this year that I know we were very busy finding properties off-market to help our clients.
Yeah, look, we were very lucky. And even pre-market, I know some buyers may rock up to an open home and find it sold. That may have been one of our buyers agents, Michael, getting it pre-market or off-market. And they're generally around that 40% mark. And I guess for some of those, A-grade investment properties with development potential and things like that, it's probably even higher.
Well, I know that some of our buyers agents, the development sites, Bryce was buying 80% of the properties he bought were off market. But as you said, probably about 40% of all our transactions, and there were hundreds of them. But probably worth pointing out at this time that, sure, you're biased because you look after the buyers agent team at Metropole. I'm biased because we work together. But having said that, I believe at times like this, having somebody on your side, more than leveling the playing field, but actually to put the odds in your favour was very important, because it was just too easy to let FOMO get in and make silly decisions, cut corners, not do your due diligence.
Well, we saw that with a lot of home buyers as well, Michael, that couldn't quite enter the market. They'd been in the market for 6 months. They were panicking. Luckily enough, they came to us and we were able to get a result sometimes within 4 to 6 weeks, just by not compromising, by giving them access to every property for sale, not just the ones on realestate.com and Domain, and really helping them navigate that. And it was a huge advantage for them.
I think the other thing is you actually stop them making the mistakes that they'll regret, because we know with investors that the majority, 92%, never get past their first or second property, and it's because they haven't bought the right property. So if you're keen to take advantage of the markets in 2022, why not have a chat with Brett and his team about your property needs? But I think part of the reason we help people, Brett, is because it starts by putting a plan together. It doesn't start with the property. How often do people come to you and say, where should I buy? Isn't that the first question they ask?
Usually it is, and I'd be a rich man if I had $1 for every time that I was asked that, or how's the market? But yeah, look, it does start with a plan, and I guess reverse engineering the whole process from the end goal and what they want to achieve, and then starting to work towards finance and structures and comfort levels and buffers, and the very last thing we rarely talk about initially, but the very last thing is the property. But unfortunately, people do it the other way around, Michael, and as we know, most get it wrong.
Well, not only do people do it, because I guess that seems obvious. I'm wanting to buy a property, but so do a lot of other buyers agents. But in our mind, the property is the physical manifestation of a whole lot of decisions. Property investment is a process, not just an event. And if you get them in the wrong order, unfortunately, you become a casualty. The trouble over the last year, though, Brett, is that almost anyone could look good last year, because if you bought in the wrong location, it still went up 10%, and you thought, hey, look how smart I am.
Yeah, and I think that's going to be the challenge moving forward, particularly when people have got it right and maybe have got 10 or 15%, but in reality, the market may have done 20 or 30%. And I think those types of properties, when the area does come back or the market does come back, will probably retract a little bit as well, and they'll be left wondering what they've done.
Well, I see one of the trends moving forward in 2022 to be a flight to quality. Now that there's more choice, more selection, and a lot of the initial buyer demand that was pent up from a couple of years, 2019, 2020, 2021, there was lots of stops and starts and the market stalled. So there was significant pent up demand. But now that a lot of that has moved through, what's going to happen is that there's going to be bigger selection of properties, and there'll be more a flight to quality. People are going to be more careful about what they buy.
Absolutely. Number 7, Michael, property sales volumes have soared.
Yeah, well, that was another record. It was estimated that there were 614,635 properties changed hands over the 12 months of 2021. That's what CoreLogic said, and that was a high of level of almost 18 years ago. In fact, in November, property transactions were 32% above the decade annual average.
That's incredible, Michael. We had an incredible November. We had a lot of competition. We got beaten a lot at auctions. So that certainly explains things. Trying to get in before Christmas, I presume.
Sure, people want to finalise their deal, both sellers and buyers. That also happened with auctions too. I mean, there were massive auction numbers. So in December, we saw a record number of properties taken to auction, which resulted in a record value of properties transacted. So, boy, I think we just discussed 3 or 4 records. And interestingly, it's not just Melbourne and Sydney. Over the second half of this year, Brisbane was often the city that had the highest auction clearance rate. Brisbane's really taking to auctions now, isn't it?
Well, they are. I think it's because of all the Southerners coming up who are used to those auction markets. But look, I mean, when there's so much demand, and I guess there's at a lot of time there during the year, Michael, a lot of agents were having difficulty pricing properties because they were selling for 10 or 15% above what they thought. But I think at the end of the day, they had no option otherwise to take it to auction. So absolutely, it's really starting to change here. I mean, we'd be happy if we got a 35 or a 40% a year or two ago, and now we're well into the 70s and 80s. So it's quite incredible.
For auction clearance rates.
Yeah, for auction clearance rates.
Now, I think another interesting trend was that rents finally rose after several years of actually very slow rental growth. In the year to November last year, Australian rents rose 9.4%. That was the strongest rise since January 2008.
Well, it was. And I guess across the board, Michael, as you said before, all states saw some rental growth, which is quite encouraging. The combined for the regions was 12.5%, while the capitals were 8.3%. So again, the regions leading there.
But I think there's a reason for that, Brett. There aren't that many rental properties in regional Australia. And if a small group of people suddenly decide, I can work from home, I want to get away, I want a different lifestyle, it put extra demand in the short term on some of those regional rental markets and also housing markets. There isn't a big supply, there isn't a large turnover. So that's one of the reasons that there's a disproportionate rise in rentals and also in property price growth in regional Australia.
Yeah, when we were talking probably hundreds of properties and thousands of properties, but not hundreds of thousands, and
that's
like
right.
We are in the capital. So it's a really good point to make sure you get the devil in the detail.
Definitely.
I guess number 9, Michael, is that capital cities experienced a net loss of people, and who would have saw that coming?
Well, Australia's closed borders put a halt to migration, but the tight borders didn't actually stop Australians moving house. We've already spoken about the fact that they upgraded, but one of the things that they realised is they can work remotely. Now, we know that ourselves at Metropole, a couple of our team members have moved interstate, where they moved to, Brisbane. And again, because they're not on the ground people, but actually doing the research and doing the strategic plans, what that means is that their expertise, their knowledge work, it doesn't matter where they are. I mean, I think one of the important factors of your team is that you have on the ground people that don't fly in and out. So we have Brisbane property experts, Sydney property experts, Melbourne property experts. That information, that perspective takes 20, 30, 40 years to build. You can't get that overnight. But separate to that, though, well, I guess what we're saying is that when Australians learned they can work remotely, it led to a net 43,000 people exiting the capital cities in favour of the regional areas. I guess it was the sea change and tree change we've been talking about for a long, long time. Now, that's not a lot of people leaving capital cities. 43,000 people isn't going to create a slump in Sydney, Melbourne, Brisbane, especially when you space it out over a lot of states. But it will make a difference if 200 turn up in each little country town.
Well, that's, I guess, what we were talking about before, Michael, with the rents, wasn't it, in terms of the changeover.
There.
Number 10, demand for luxury properties soared and the $3 million club doubled. We talked about the $1 million club, but interesting to see that the $3 million club doubled as well.
Sure. Well, This cycle started at the lower end of the market where more affordable properties and first home buyers got into the market. But what normally happens is as the economy picks up, as businesses are doing better, as people who've got multiple sources of income become more affluent, they upgrade their homes as well. And while the value of most properties increased in 2021, the year finished with the luxury end of the market outperforming. I guess many of us just reassessed our housing needs over the years, but the wealthy Australians and the returning expats, they had the ability to opt for the sort of lifestyle and upgrade that they wanted. And you're right, it meant that the $3 million suburbs, the club where median price was $3 million. That also doubled in 2021. And as we've already said, lots more suburbs became $1 million suburbs. In fact, 392 new suburbs nationally joined the $1 million club.
Yeah, it's quite amazing to see those statistics just doubling in a year, isn't it? I mean, it's taken 20 or 30 years to get to that point, and they double in a year, which is amazing.
Well, I think that's an interesting thought because as we move forward, the government has got a business plan for Australia. It wants to increase our population. And while it took 200 years to get to a population, since the European settlement, 250 years to get to a population of 25.5 million, they're wanting us to get to 40 million by the middle of this the middle of this century. And what that means is that it's not doubling, but it's going up 50%. That means that for every 3 houses in Australia, we're going to have to build one extra one. So it's an interesting compounding effect.
Interesting times. Again, on the regional topic, Michael, demand for regional property soared, which we spoke about, and that fueled record-breaking price growth.
It did. And so there are people out there saying, I told you so. Regional Australia's the place to invest. And there's no regional Australian property market, just like there isn't a Melbourne or a Sydney or Brisbane property market. So when you compare regional Australia to capital cities, you're not comparing apples with apples. When you're comparing regional Australia with Brisbane, you're not, because some areas have outperformed others, much the same with regional Australia. So there's lots of lovely places to invest in Australia. There's lots of lovely places to live in Australia. My feeling, though, is that if we have another risk, another pandemic, another issue, and we will. Every 10 years or so, the world breaks, something goes wrong. Could regional Australia have coped like Melbourne did with 260 days of lockdown? I believe you should be investing in big cities where there's multiple industries that's going to cope well. So I don't know what's going to hit the small towns next time round, if they're going to be spared like they have been this time round. But I'd rather not fight the big gorillas, Brett, and invest where the action is, where the growth's going to be. They're talking about 200,000 people coming into Australia early this year, skilled migrants. They're talking about increasing just the general immigration, and the majority of those are not going to want to live in regional Australia. That's not where the high-paying jobs are.
No, and I think something you picked up midway through the year, Michael, is with all these lockdowns, it also meant that the people from the regions couldn't move to the capitals. So we're talking about the small amount of numbers and people moving into those areas. Well, if people aren't leaving to come to the capitals, then that's probably a big part of what fueled that price growth as well.
Very good point. Hey, if you lived in regional Australia, why would you have moved to Melbourne or Sydney in particular over the last year? Are we working our way through COVID? Who knows? We've learned not to become complacent with these things. But I think these records show that despite the recession, there was a little one we had in 2020, despite the pandemic, despite all the problems, our housing markets are resilient. Aussies are resilient, and I see moving forward there's going to be many more property records broken in 2022.
Yeah, it's going to be an interesting year, isn't it? I think all the stage is set for another strong year. I think there might be a bit of an X factor there, Michael, with the borders opening. It'll be interesting to see when that happens and what happens with migration and students returning and things like that. So it's certainly going to be an interesting year.
Yeah, I think the final message I'd like to leave somebody who's considering growing their property portfolio, adding another property to the portfolio, or starting is, don't count on the rising tide lifting all ships. don't think that this year is going to be the same. I think that's one of the problems. There's lots of people who haven't lived through a cycle. There's lots of people giving advice at the moment who show proudly how well they've done over the last 2 years, but they haven't lived through a whole cycle. I think unless you've lived through a couple of cycles, you don't really understand the ups and downs. I have lived through good times like this in the 80s. I haven't lived through the one in the 50s. I wasn't even born in the early 50s when the other very big boom occurred. But having seen the ups and downs, it's made me a more cautious investor, but I know the perspective that all the others at Metropole bring and the depth of our research is going to actually help protect our clients moving forward and ensure that they only buy investment-grade properties or A-grade homes.
Yeah, and obviously working and investing over that period of time, Michael, you don't invest for the next 12 months, do you? It's a long-term game, and I guess the most important thing is actually having time in the market rather than trying to get it right, which so many investors seem to want to do.
Sure. Well, a really good example of that is people who bought apartments a couple of years ago, not the high-rise apartments, but the family-friendly suburban apartments. They didn't do as well as houses in 2020, 2021, because people were shied away a bit from apartments and houses outperformed apartments. But interestingly, the gap between houses and apartments has never been as big in the value of houses and apartments. Hey, that's another record we could talk about. But I believe that with very few new apartments on the horizon, on the pipeline and builders' books, with people coming back to Australia from overseas, with the borders being open, with minimal vacancies, not many properties available for rent, apartments are going to become more popular in 2022, family-friendly, medium-density apartments. And I'm talking particularly in Sydney and Melbourne. Brisbane really hasn't embraced the apartment culture as much. But the gap is too wide. A lot of people just aren't going to be able to afford a house. Rents have moved up considerably. Tenants are going to move in. So I see one of the trends, if you can't afford a house, look at townhouses. If you can't afford a townhouse, look for an apartment, but in Melbourne or Sydney. And if you can't afford your hometown, be comfortable with being a borderless investor because there isn't one property market in Australia.
Good points, Michael. It was a pleasure spending time with you and talking about a record-breaking year.
Fantastic. I look forward to having another fun year together with you and the team at Metropole.
Thanks, Michael.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
Many years ago, my mentor, Jim Rohn, taught me that life is worthwhile if you use 4 powerful little words. These words are learn, try, stay, and care. What a difference you can make to your life by putting these words to work. Jim Rohn taught me that, first of all, life is worthwhile if you learn. If you know. What you don't know will actually hurt you rather than what they often say, what you don't know won't hurt you. You have to have learning to exist, to grow, to succeed. Life is worthwhile if you learn from your own experiences, both negative and positive. We learn to do it right by doing something wrong the first time. We call that a positive negative. We also learn from other people's experiences, both positives and negatives. Jim Rohn always said it was too bad that failures don't give seminars. He said we don't want to pay them so they don't go on tour and give seminars, but the information they would give you would be very valuable. How somebody who had it all messed up. Learning from other people's experiences and mistakes would be very valuable. We learn by what we see, so pay attention. By what we hear, so be a good listener. Now, I suggest, though, you become a selective listener. Don't just listen to anybody dump into your mental factory. We learn also from what we read. Learn from every source that you can. Learn from podcasts, learn from lectures, learn from conversations, learn from people who care. So I guess the first part of this lesson is always keep learning. It's one of the rich habits, the success habits of all wealthy people. Jim Rohn then went on to say, life is worthwhile if you try. Remember, he said there were 4 really powerful little words: learn, try, stay, and care. So life is worthwhile if you try. It doesn't mean you can do everything, but there are a lot of things you can do if you just gave them a try. So try your best. Give it every effort. why not go all out and give it a go? Jim Rohn also said life's worthwhile if you stay. You have to stay from spring to harvest, he said. From the beginning to the end when you reap the rewards, I guess is what he was saying. So if you've signed up for the day or for the game or for the project, see it through. Sometimes calamity comes and it looks like it's worth just wrapping it up, but that's not the end. It's only the middle. Maybe the next project will be better, so stay on this one. If you signed up, see it through. And that is definitely one of the success traits of the wealthy people, the successful people, the rich habits. They actually stick to it. They see it through. Remember, Jim Rohn was teaching us about 4 powerful words: learn, try, stay, and the last one was care. He said life is worthwhile if you care. If you care at all, you're going to get some results. If you care enough, you're going to get incredible results, he said. Care enough to make a difference. Care enough to turn somebody around. Care enough to start a new enterprise. Care enough to change it all. Care enough to become the highest producer. Care enough to set some records. Care enough to win. Some great words from the late Jim Rohn. Life is worthwhile if you put these 4 words to use. Learn, try, stay, and care. Well, just looking back on my chat with Brett, it's amazing to see how many records were broken in 2021, and I'm sure there's going to be lots more broken in 2022. But it's not going to be the same. There's not going to be as fast capital growth, and as we discussed, not all properties make investment-grade properties. So if you're wanting to protect yourself from the landmines ahead, if you're wanting to even the odds and put them in your favour, why not have a chat with my team at Metropole? When you look at our website, metropole.com.au, you're going to find out we've got no properties for sale, but we have a breadth of services, a very holistic approach to wealth creation. So it includes strategic property advice, buyer's agency, property management, renovations, development, wealth advisory, financial planning, and even business advisory. Because creating wealth is a process, it's not an event, and we're there in the long term to help you. Go to metropole.com.au. I'd love to be part of your wealth creation journey. Now, if you got some benefit from today's show and you know somebody else who'd benefit from hearing about these records that were broken, please tell them about the Michael Yardney podcast. Please help me in my quest to make as many people as financially fluent as possible. I'll be back again real soon, but in the meantime, you can catch me on social media. Just look for Michael Yardney or join my private Facebook group, where each day I leave a little snippet of something I don't leave elsewhere to help you keep up to date with what's happening in the world. Go to Facebook and look for the Property Update Facebook group. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?